What's going on, YouTube, man? Welcome back to another video. Know what I'm saying? If y'all have noticed, I've been gone for like a week or two. Bro, listen, let me explain real quick. My PC, bro, broke down, my nigga. My PC broke down, bro, so I couldn't record. Know what I'm saying? I wasn't even in the record to make no in-person videos because I ain't had no PC, so I was like, fuck. So I got it to work now. I got my PC back working. So now I'm able to record. So now we getting back at it. And I got one more announcement before we start this video. I'm about to be doing I'm gonna be running a community sometime soon. But I'm gonna be building that in the background. But for right now, you know what I'm saying, we're just gonna be trading. But I'm just wanna let y'all know I'm gonna be building a community, you know what I'm saying, in the future. Sometime in a couple months or like a few months, something like that. But let's get into the video. So in this video, I'm going to be showing you guys one model, bro, that I use. And this is like one model that you could use, know what I'm saying, in your repertoire, know what I'm saying. And you could only use this model. I'm not saying that you can only use this model, but I'm saying this is something that you could use universally, and that's all you need, know what I'm saying. Like, you won't need nothing else once you know this. And as you can see in the title, you don't need a daily bias either with this model. Now, it is important to have like a daily bias that is like like an added on factor, but necessarily for this bias, for this model, you don't need a daily bias. You know what I'm saying? So let's get into the video right now. This model is going to be the 945 macro, also the 950 through 1010 macro, but I really want to focus on the 945 macro. So that's what this model is going to be, 945 through 10 o'clock. So if you watch ICT, there's a macro 950 through 1010. But this model specifically, always the entry is always going to be before 10 o'clock. It's never going to be after 10 o'clock. It's always going to be in between 9:45 and 10 o'clock. You know what I'm saying? So like 10 o'clock trades is silver bullet. I wouldn't call that like the macro. I usually like to take my macro trades before 10 o'clock. So this is Tuesday's price. I don't trade Wednesday, so I'm going to get into Tuesday's price. Tuesday, as you can see, we were bullish. I was looking for higher prices on Tuesday. Like I said, you don't necessarily need a bias for this model, but if you do have the correct bias for that day, you know what I'm saying, it's an add-on for sure. Because there's a lot of times where I feel like I'm talking too much, but I want to explain. There's a lot of times where my bias is wrong and the macro corrects it for me. You know what I'm saying? So that's why I'm saying that, right? Okay, so going into Tuesday, we were bullish, right? We have this range right here, and this is Tuesday's price. Okay, so going into 9:30, which was somewhere, it was right here, right? We have a Judas swing down to a discount of this range. You see this range right here. You got halfway point right here. We traded below it. That's a discount. Anything below 50% of a range is a discount. So we traded it into a discount. 9:30 started the run down here, traded into a fair value gap. And then we swept some liquidity down here. Swept these lows. And we didn't take out this low. So that was important. That was important for me when I seen this. I seen that we took out this low. And on a 5-minute chart, there was some inefficiencies right here. There are also some on the 1-minute chart, but they're small. But we didn't take out this low. And when I'm looking at this at 9:30, when I'm seeing what we're doing at 9:30, I'm also anticipating a move around 9:40 through 9:50. So at like 9:45, I'm expecting to start to see what we're actually gonna do prior to 9:30. You know what I'm saying? Because price is all combined together. So 9:30 is gonna run off. 9:45 is gonna run off 9:30. 10 o'clock gonna run off 9:45, 9:50, and so on. So 9:30 right here, boom, we drop down. We drop down. It's 9:37 right here once we hit this low, right? So we trade higher, boom. This is 9:40. So at 9:50, I'm trying to see what are we gonna do. So I want to see at this point, not 9:50, 9:45. I want to see if we're gonna trade into this fair value gap and trade lower, or do we want to reverse? So I'm still waiting for that time. So this is very, very important. You don't have to wait on price with this model. Wait on time. You know what I'm saying? So if you're confused right here and it's 9:42, bro, give it 3 more minutes. It will show you what it want to do, bro. Because it's not going to be 9:45 and we start trading higher. And then, like, if we, for an example right here. All right, so boom. This is 9:45 candle right here. So at 9:45, we got this candle right here, this single candle. What's important about that single candle is what? After we ran down here, took out some sell side into a discount of this range, 9:45 candle made a shift in market structure higher, changing the state of delivery. So after we have a sell program lower, we turn around, shift the market structure. Now I want to see buy side engage since we ran sell side and ran into a discount of that range. Right after this shift in market structure, everything changed. Also, this is an order block as well, changing the state of delivery. So now after that happened, I always put my focus on the next obvious high. And the reason why I said the next obvious high, because I usually just aim for the next high, but a lot of people would think that I'm aiming for like this high right here. But this is a short-term high. I don't want a short-term high. If we took out major liquidity and ran into a discount of a range and we're bullish, we're most likely to go take out a prominent high, which is right here. And then you also got these highs right here, but I'm just marking up the next swing high, right? So boom, this is the next swing high right here. Boom, make that blue buy side, right? So you see at 9:45 we started trading higher. So once you see this market shift to market structure at 9:45, I didn't take my trade at 9:45, but it lets me do it. It lets me know now that the macro is running, and that's where we most likely to go to this high. So now what I want to do is just wait for a fair value gap. You know what I'm saying? They literally just wait for a fair value gap because it's in that time that is supposed to happen. So the first fair value gap on here that formed was at 9:47, 2 minutes right after 9:45. Boom. So we traded into the fair value gap once right here. We did break the fair value gap candles low, which I don't usually like happening, but I usually have a 20-point stop loss on my fair value gap trade. So if I get in at the high end of the fair value gap, I want my stop loss 20 points. So right here is 62. Your stop loss should be at 42. Right here, it should never hit your stop loss. So boom, came into the fair value gap here. If you did get stopped out, another re-entry right here, boom, came into it again. And then we got a break higher, breaking this down candle, order block, right? And then we also created another fair value gap in here that didn't get traded into. So I classify that as a breakaway gap. And when y'all see these signatures and price, so when we create fair value gaps, when we're running to a point of liquidity and we don't trade into them, as you can see, this fair value gap wasn't traded into. That lets me know that price is more bullish than we would be if we did trade into that fair value gap. So when you see price create fair value gaps and don't trade into them, expect them to go to that point of liquidity quicker. You know what I'm saying? Than if it was to trade into the fair value gap. So boom, and then we trade higher. We got expansion higher right into that buy side. This was 10 o'clock news too. A lot of people think that you shouldn't trade before the news, but that's completely not true all the time unless it's like NFP or CPI or some shit like that. Yeah. But if it's just like regular news at 10 o'clock and we already did what we just doing, news is not going to turn this shit around, bro. It's going to go run for the target. All right, so that was Tuesday's price. Now, I didn't mention this in the beginning of the video, but I'm going to show y'all all the trades that I took this week using this one time. You know what I'm saying? And yeah, Tuesday, Wednesday, and Thursday, because I don't trade Friday. So every trade that I won this week was literally at the same exact time. Not at the same exact time, but inside the time at 9:45. Right? This one was damn near exactly at 9:45. So on this trade right here, This is Wednesday's price action. As you can see, you can't see it. You can't see it to the left, but this Judas swing right here took out daily highs. I'll show y'all real quick, bro, so y'all don't think I'm capping. Let me show y'all so y'all don't think I'm capping, bro. Where Wednesday was at? Or was it not Wednesday? Hold on, bro. Y'all think see I'm capping. Where Wednesday at? My fault, y'all. My fault. Oh, yeah. All right. So we took out these highs, right? Yeah. Y'all thought it was capping. Yeah, we took out these highs right here. Yeah. On Wednesday with that Judas swing. Yeah, let me get back to it. Y'all thought it was capping. It wasn't capping. You know what I'm saying? So, where was we at? All right, boom. All right. So, 1 second. All right, I had to take a phone call. All right, boom. So, right here, remember 9:45 through 10 o'clock. You know what I'm saying? We're looking at that macro time for entries. So at 9:30 right here, and I'm always basing this shit off 9:30. Of course, I'm looking at price before 9:30, like pre-market, but 9:30 is where I start. Like, all right, what the fuck is we doing type shit. So 9:30, we came and we swept those highs I just showed y'all in the higher time frames, and we came and swept these highs too, right? Boom. So we got 9:30, right? And then we got an expansion higher at 9:39. But you are not worried about that expansion, buddy, right? Why though? Why? Why are you not worried about expansion? Because it's 9:39, brother. It's not your time to trade yet. We're waiting for 9:45. And to be honest, bro, I'm capping. A lot of these trades do, some of them do start before 9:45, but the fair value gap perform at like 9:43 for 9:42. Know what I'm saying? So boom. We're not worried about this candle because we just ran that buy side. We want to see what we're going to do after we run the buy side. So we wait for 9:45 right here. Boom. We get our 9:45 candle. We got, see, look, bro. Look. At 9:45, we got a displacement candle, right? You see how big that candle displacement is? Also, what also did we do? We inverse this fair value gap. This is an order block right here. Right here. We broke below it. So boom. We inverse this fair value a lot. We inverse this fair value gap. Created an order block. 9:45. We got obvious as displacement right after running a high on the higher time frames and creating a fair value gap, bro. I took this trade. I didn't allow it to trade into the fair value gap. I went short right here. As soon as this 9:46 candle closed and I seen this fair value gap, I went short. Why did I go short? Because my stop loss was 20 points. Watch this. 522. Y'all see that right to the right? 522. 545. Damn near 20 points. You know what I'm saying? So that's why I didn't allow the trade into the fair value gap, because I was in range. You know what I'm saying? Alright. Okay, boom. So right at 9:45, you see that? And then what do we have after 9:47? Displacement. Took out a low. Took out these lows right here. And then 950 macro. Trade into a fair value gap. 950 through 1010 macro. So these trades, like I said, typically I want them to be like 950. So if you missed the 945 trade, you got your 950 trade right here. Traded into fair value gap at 951 and 952. And then you see that we came in, we took out these lows right here. Boom. That was the low that I was targeting right here. And you see we came and took those out. Right. So time. And as you can see right here, all you had to do was wait for 9:45, and then, bro, the story was told you just by just waiting for that time, bro. They told you what they wanted to do just by waiting, bro. That's all you gotta do is wait for the time. So boom, let's go to Thursday. Same shit, guys. Same shit, bro. It's the same stuff. All right. Okay, this is Thursday. I'm tweaking. All right. So Thursday, I thought I was actually bullish on Thursday, but overnight we traded higher, right? And then we consolidated, and then we started trading lower, right? And then at 9:30, we got some displacement, clear displacement at 9:30. Traded into the fair value gap at 9:35. Why don't I care about that though? Because it's not 9:45 yet, right? So boom, we trade lower, create an order block right here, displace, boom, boom, create a fair value gap. I told you guys sometimes the fair value gaps do form before 9:45, but as long as it's inside of that time, we creating a fair value gap at 9:45, right? Around 9:45. So, oh shit, I'm tweaking. This is 9:45 candle right here. So at 9:45, we created the fair value gap. So that was like spot on. 9:45 created the fair value gap. We trade inside of it at 9:46. Boom. We got like a 60-point run down from here to here. And then we traded higher. Wait, what the fuck am I talking about? No, I'm tweaking. Okay. So boom. At 9:42, 9:41 we created the fair value gap. Traded into it at 9:43. Remind you, this is all time. We displaced at 9:44, create another fair value gap at 9:45. We got a 60-point run down to an inefficiency down here. So we took out these lows over here to the left with that run. And then at 9:50, another time-based run, right? At 9:50, we ran higher into that first fair value gap that we made right here, right below the order block. And then we got some displacement at 9:56, right? And then we traded back into it. This is not the macro trade, but this is the actual trade that I won my money on. I did take the fair value gap right here, but I ended up getting like stopped out break even because I was targeting down here, but as you can see, we came up, it came below, and then we traded back up to my entry. I got stopped out, and then I took another entry right here, which is silver bullet. 10 o'clock through 11 o'clock hour fair value gap is called a silver bullet. So boom, I traded the silver bullet fair value gap into some lows down here. Actually, it wasn't even some lows, it was opening range gap low, and I'll show y'all that right now so y'all don't think I'm capping. Where is that shit at? So this was Thursday right here, right? So alright, if you don't know what this means, this was Wednesday's close. So the close on Wednesday at 5 p.m. and then the open on Thursday at 9:30. So all that range that we didn't trade in got traded into at the AM session on Thursday. And then that's what I was targeting. I was targeting the low end of that opening range gap down here. I got my entry right here. Boom, boom. All right. So that is how you trade off time. You know what I'm saying? The macro time 9:45 through 10 o'clock. Your entry should be around here. I just showed you guys that 10 o'clock entry though. But for the most part, the entry is just going to form 9:45 to 10 o'clock. You know what I'm saying? That's all I got for this video. If you have any questions, let me know in the comments. You know what I'm saying? And remember, I said we're about to have that community running. But if you like the video, subscribe to the channel. And I'm going to see y'all boys in the next one. We out.